What's up, everybody, and happy holidays to you and your families. This is the weekly preview, and I'm not going to lie, it's probably going to be a very short video. Not because I'm one to make short videos, but simply this week is going to mostly be about you all and your families and spending that time with the ones that are most important in your life and your loved ones and your family, and eating some good ham and Christmas cookies and being with your kids and watching them light up like I'm going to with my 2-year-old, who it's his first like real Christmas, I would say, that he's actually going to be, he had his birthday a couple weeks ago and he was really excited to open up presents. So I'm really excited to see him Christmas morning, now that he understands it more. That's why I say real Christmas, because last Christmas he didn't really even open up his gifts or understand it or anything. So really excited, but yeah, it's gonna be a week of I really wouldn't be paying it much attention if I was you, to the markets, if I'm being honest. We open up Monday. We have a full trading day on Monday. Then we go right into Tuesday, where we are going to have a half day, 9:30 a.m. Eastern to 1 p.m. Eastern. And then we are going to have Christmas on Wednesday. And then we have a full market on Thursday and Friday. So here's the thing. You have Monday, which it might be a little busy, but Mondays are usually lower volume. But it might be a little busy because you have, Christmas Eve and Christmas coming up. So people get into their positions or have orders on market open on Monday. But then, like I said, you have Tuesday where it's Christmas Eve. People are with their families. People are going to be with their families for the most part this week, especially um, hedge fund, um, hedge fund employees, people on Wall Street. Like they're all going to be with their families, and lots of people are going to be traveling. And with that comes low volume, and it really depends if there's more people, if there's more bears or bulls out there for this week that are buying or selling. So that's where the market's going to go. So yes, it's typically the start of the Santa Claus rally, but at the same time, it's probably going to be a meh week overall, honestly. Um, Maybe at least until Thursday, Friday, where people are more there. But at the same time, like I said, it's going to be a week where people are traveling, people are spending time with their families, so on and so forth. So don't get your hopes up for anything crazy this week. If we get away with a 1 or 2% week to the upside, I'll be happy because that flows us into the next week going into 2025, and that puts us, about 523-ish, back into 520 plus 525-ish on the QQQ. And then we can have that nice, we can have a week like this, and then we can have that continuation back to all-time highs into 2025 and up to our price targets of 560 and 580. I'd be happy with that. And I'm not going to be posting a lot this week. I'm really wanting to, spend time with family and just step away from this a little bit, just because I got family in town, and I'm going to be with them. So yeah, just kind of give you a heads up for this week. But um, let's just go over everything real quick. We already pretty much went over everything pretty religiously last week, but just clean up a couple things, look at a couple things. QQQ, we did end up getting a sell through towards the end of Friday, which I believe was people heading home early for the weekends, and the Bears just snuck in there and just shot us down a little bit. So we're broken out of the Williams consolidation box on the weekly, not on the monthly at all. We're still good on the monthly, which I look more at the monthly for our uptrend continuing, like you see here. Even on the weekly, though, we may have squeaked out of it a little bit, but our lowest support was 28.80. I usually like a support in the 30s to 40 range anyways. So for us to come up here and then pull back down a decent bit for our box, for our Williams consolidation box. So it is what it is. This is not the be all end all. Okay. My high five is number 1. The Williams consolidation box is number 2. So if we're still green on the high five, I'm not worried. And also, if you just look, like I was telling somebody the other day, when we get the bigger pullbacks, as we see here, here, and here, what do we see? We really see this. So the green and red line, the green and red bar is my high five indicator. It's my personal trading strategy, and it has everything, and it has all these. It's my whole strategy coded into one single line. Basically, it turns green when my strategy is um a go, and it turns red when my strategy is a no go or a sell, right? To short. So it's also just the line itself is a 9 EMA, and this yellow line is a smoothing moving average. So what do we see when we get these bigger pullbacks? We see the 9 EMA really getting tight with the smoothing moving average when we have this push down. Tight with the smoothing moving average when we get this push down. Tight with the smoothing moving average when we get this push down. Well, look how spread out we are from this moving average still. We are still pretty spread out from this moving average. Now, if we get this week where we continue to push down, then I don't know. But from what I'm seeing, when we are continuing up, we ride this 9 EMA. We just keep bouncing off of it. And look what we did last week. It was a crappy week last week, but we bounced right off that 9 EMA, and that is very bullish because when we are in an uptrend, we just keep bouncing off that thing. Whenever we are not in an uptrend, as you can see here, when we get the bigger pullback, we crash right through that thing. And we never actually crashed through the 9 EMA, which is very bullish. So yeah, I still think we're in this uptrend. I think it was a flash crash. Um, I've already put out countless analysis on my not just opinion, but my technical analysis, my fundamental analysis, my economic analysis, all things analysis I put out last week in very, very defined detail. So go back and look through all of that. But yeah, at this point, the government isn't shutting down, which again, it happens every year, and it's all just fear, uncertainty, and doubt. And it's really not that big a deal. I've been through this 13 years in a row, continuously when I was in the military, and it's something that everybody always freaked out about, and then it literally was, oh wait, they passed the bill. I think the longest we ever went with the government actually that shut down, the majority of the time, if it did, it was only a couple of days, and then they got it fixed. Um, when it was the longest was about 2 weeks, and then they got back open. It's really not that big a deal. I know it seems like a really big deal, but I'm telling you, it's really not that big a deal. And it's just something that happens every year that's a little bit scary, and they always get it resolved. They always print more money to keep it open because they want to get paid. Because what happens is federal employees do not get paid when the government shuts down. So um, that 2 week period, back in 2015 or 2016, I think it was, I didn't get one of my paychecks. We would get paid every 2 weeks, and I didn't get one of my paychecks, and everybody's freaking out and stuff, which they back paid us. But I digress. It's not that big a deal. So also all the economic numbers that came out last week, there's no real economic numbers this week besides durable goods. Um, which meh. Um, retail sales beat by 20 basis points. Um, the Fed cut by 25 basis points. GDP growth was beat by 30 basis points quarter over quarter, and by 10 basis points from the prior. And your PCE beat the prior by 20 basis points and the forecast by 10 basis points. So yeah, all the economic numbers are really good, and this PCE number right here, beating by 20 basis points and even beating the forecast by 10 basis points, um, basically tells Wall Street to call a spade with the Fed, and basically say, "Yeah, I'm not buying it. Fed pal. I'm not buying it, Fed chair pal. We don't buy it because the PCE is the Fed's preferred inflation data to look at, and it just beat by 20 basis points, and it beat the forecast by 10. So, yeah. So what concrete data do we have to warrant this at its worst 5 almost 6% pullback on the QQQ and the SPY, and then a massive 10% correction on the Russell 2000 IWM? What concrete data do we have to warrant what happened? Um, Nothing. We have the Fed coming out, and the only concrete thing was, hey, we're projecting that we are only going to cut twice in 2025 instead of 4 times in 2025. And I understand that's scary, but let's not get it twisted. Who's coming into office in 2025? Trump and his administration are for business, they're for small businesses, they're for a great economy, and most of all, the thing Trump wants to be most known for is a booming stock market. We saw it from 2016 to 2020, everybody. And if you weren't in the stock market then, just go back and look at it. It was booming up until COVID. And then it crashed, and then it really boomed. It basically, that thing you always see, the I forget what it's called, but it's basically like euphoria, or uh, coming out of the for bull markets, coming out of the gulag, running up, and then hitting euphoria. Up, okay. Oh no, we're crashing. Oh wait, we're good. We're not crashing, and then boom, we fall off a cliff. So basically, this. Let's see. It actually, funny enough, it went like this. It went the opposite way, and then we crashed. So this was right before COVID. This was the COVID crash, and then this was 2021 when we flew up to euphoric heights, and then we crashed hard. So it was actually inverse of what it typically is, and that's really because you had COVID, the COVID pandemic and the COVID crash. So, but I digress again, and this video is already getting long. I can't help myself. Um, So, anyways, real quick, we're still in an uptrend. We're still in a bullish uptrend on the QQQ. We bounced right off the 9 EMA. Yeah, we came out of the Williams consolidation box, but at the same time, we're still green on the high five indicator. We're bouncing off the 9 EMA, and we still have this ascending triangle pattern breakout to reach our measured move up to 580 before March 2025. So, yeah, if I was to say, if we get to 580 or 560 in here first before we have, a 15% crash, I would say we get to 560, 580 before the 15% crash down to like 460s, 450s, 480s, 70s. SPY, same thing. It cracked out of it a little bit more down to 36. But here's what I'm going to do. If we wicked off the smoothing line this time on the SPY over the QQQ. And essentially, if we, fly back up into this Williams consolidation box, I'm doing this. And the reason I'm doing this is because, well, actually, you could do this. Whoops. With the Williams consolidation box, this right here is at 43. So you could have built the box around this support, because we ran up. We had this big fly down on this September 3rd week, and then we're staying within here. So I'm actually going to pull it down to there because I like it being down to 45 rather than it being down to 26. Like I said, I'd rather it be 30 to 40, negative 30 to negative 40 support. That way it gives it a little bit of room. You know what I mean? Because This was just a boom boom 2-day, what was it? At its worst, it got down to like around a 4% correction, and pre-market it got down to, I'm not doing that. Yeah, it got down to like 4 to 5%. So it's just a pullback on the SPY. This is also still in an uptrend. And yeah, if it was a bigger move down, we would have saw, like something like this. But the difference between now the Q or the SPY is actually different. So if you look at the pullbacks we've had in the past, like these, we see it crash right through the smoothing line instead of the 9 EMA. Well, obviously it crashes through the 9 EMA first, but it crashes through the smoothing line as well, which we didn't have that. We wicked off the smoothing line. And if we keep bouncing off the smoothing line, typically that's what we do whenever we're not done with our uptrend. This one crashed through, but that was the Japanese trade crisis. But this one, held, bounced through. This one held, bounced through. This one, I think, is going to hold and bounce through and continue in this bullish uptrend. And then also it gets close, but we're not there. Another bullish sign is that we actually wicked all the way back up to be right at the 9 EMA. So essentially, you think of this wick. When these things wick like this, you can basically just cut that wick off and say, okay, we ended above the 9 EMA. So we might as well have been bouncing off the 9 EMA. Yeah, we had this little flash crash down here, but we ended above the 9 EMA, which is bullish, especially when you get that flash crash saying that buyers came in and scooped this right up back up to the 9 EMA, which again is very bullish. So looking at the IWM, we are red on the high five indicator. How could we not be? It was a 10% correction, not a pullback, a correction on the IWM. But here's what I'll say to that. I'm going, I'm not even gonna comment on the Williams consolidation. The IWM is just more volatile. It's a much harder thing to predict. I didn't take that into consideration, honestly. I was comparing it more with the QQQ and the SPY that moves slower, and that's on me. I should have, when I was making these predictions and calling out about the IWM. I still think I could have been right if we didn't have, the Fed come out and be the Grinch or the Scrooge, um, with his FUD spreading. But it is what it is. It's not like I, made a giant, call option on TNA or anything like that. It was a very small amount of my portfolio. I was putting my money where my mouth is, and I think I could have still been right, and still could be right, actually. We just have to see. But we're at that bounce point like we've been in the past here on the daily. We're coming down hard on the weekly, so there ain't no Williams consolidation box anymore. We're red on the high five indicator, but as we've seen in the past, this thing doesn't stay red long when we're in these uptrends. So we had this big double crash before the Japanese trade crisis, then on the Japanese trade crisis, and then we continue higher. So that, plus the fact that we are right at this massive volume shelf, as you can see here, massive volume shelf. We were right at it, and guess what? We wicked right off of it. So I'm confident that we can fill this gap right here up to about 235 to 230, or from 235 to 240. I'm confident we can bounce and fill this gap, and we stay in this bullish uptrend, because we also have that bullish uptrend in the QQQ and like in SPY. And like I said before, IWM still needs to play catch up. So I think they're going to still have a great year in 2025. And yes, there's definitely been some names in specific sectors that have seen some euphoria. I will admit that. But when we had the crash in when we had the top in 2021, and then the big pullback 2022, 2023, especially in small caps, we saw euphoria in not great like just terrible names like Tattooed Chef or just stupid um names. And we had SPACs and we had everybody and their mother IPOing, and we are not in those times yet. We're not in those times yet. So I don't buy that we're done with this bull market. I think we have a lot more room to run in 2025 before we get that crash. There will be a crash. There will be a 15, 20 plus percent crash in the markets. I truly was telling a friend this the other day. I was saying, I actually am happy that we had this flash crash because I really truly believe that this delayed, a bigger overall crash. Especially, I don't believe now in Q1 2025 we have that major crash anymore because we we got a lot of they got a lot of people to sell their gains before tax year or before the tax year ends with that crash, with the flash crash. They got a lot of people to sell those gains before the new year. So now you have less people waiting for 1 January to say, "Oh, I got to sell these gains now because now I have a year and a half with these gains." So it honestly made for not such a bad correction or crash in the first quarter of 2025, especially in January when people say I'm locking in these gains now because the Fed and his Grinchness and what happened, they really forced the hand of a lot of people to sell those gains because a lot of people were fearful, and especially the Fed was spreading fear, uncertainty, and doubt about inflation coming back and blah blah blah. But like we see in the economic numbers and everything, it was all just empty words. It was just a word salad that man put up there, just a negative, disgusting word salad, and he crashed the markets. But now seeing all the economic data last week, seeing how markets reacted to the crash, and then especially to the government not shutting down and the PCE numbers, yeah, I still believe we're in a bull market and an uptrend. But yeah, IWM, I still think it bounces off this massive volume shelf. Bitcoin and Ethereum. I already posted about Ethereum yesterday, so I'm not gonna really post about that. I already did a chart on it. But yeah, I mean, we're still in the Williams consolidation box. We're still in an uptrend. We are at um the upper area of this channel, right? So we have this pullback in here like we have right now, which gives us room to bounce and continue up to our 109,000 profit target, and then maybe another pullback, and then up to our 100 and almost $30,000 profit target. So Bitcoin I still think is running. Ethereum I still think is running. It's just a pullback. Ethereum, you have this beautiful bull flag. We haven't broken out of the cup and handle yet. Baby, when we break out of that cup and handle, though, oh my goodness, we got to move up to $6,838 measured move of this cup and handle. So already broke out of the bull flag, retested it. Now coming back for a more significant retest, I guess, before we bounce higher on a volume shelf. So um TLT, I think this could actually be a liquidity grab move. We are still barely hanging on since we wicked up last week. We're barely hanging on to this volume shelf. This is the bigger volume shelf. This is the last bit of the big volume shelf before we really drop off this cliff, as you can see here, from here to here, right? So we're right here, barely hanging on. I think this could have been a liquidity grab, where basically you flash crash down through the trend, but then over the next couple weeks you reclaim that trend and then you continue higher. Um, I believe that's what we could see in this name. And you have this divergence. As you can see, these higher lows on the Williams percentage range. So that also plays into it. And then you have this beautiful VIX that spiked up to almost 30, which the 1 day VIX was higher than the 1 day of the Japanese trade crisis. And I also was saying how that was complete farce and ridiculousness because the Japanese trade crisis was much scarier. And I really thought that was going to be the crash because it was just ridiculous. You have all these billionaires with all their money locked up, and yeah, it just wasn't good. And they had to sell a lot. And I thought it was going to be worse, but we rebounded very quickly. And the thing about these big flash crashes, the faster and harder we crash in the shorter amount of time we crash is when you get these V-shaped recoveries, just massive V-shaped recoveries. Because typically a crash like that is not valid. It's not a valid reason. It's not like a continuation where we're continuously making lower highs and just on our way down after, up things are bad. Things are really bad. Things are getting worse. Oh my God. Oh my God, the world is ending. Bottom. Then we go higher lows, right? Then we go higher lows, and then we can uptrend and go forward, right? That's typically how those things work with crashes. When we get these nasty like COVID like boom, just straight flash crash, COVID, Japanese trade crisis, uh Fed spitting just massive amounts of FUD. When we get these boom V-shaped recoveries, massive bounce back, because it's this right here. People say, "Oh my God, COVID! Oh my God, things are so bad," and then people say, "Oh wait, nope, it's not that bad." Which actually, COVID was bad, and we were up here when things started getting really bad. I'm not even gonna try to speak on that. I don't know what happened there, guys. I mean, that's just I don't know. I'm not even gonna try to speak on that. To try to understand what happened with COVID and the crash, and then in the beginning, and then things got a lot worse, and then it was we continue to fly high. I mean, no words. But Japanese trade crisis, a flash crash down, right? Flash crash down, V-shaped recovery, and that's what I think we're gonna get with this Fed. It's just spitting FUD left and right. This VIX spike down. I think this VIX is gonna continue lower, back down to its depths down here, like it already is at, and we'll stay down here. Anything really over 20 is when you get in that like massive spike of VIX. Anything up here, no good, no good. We're gonna get massive moves down when we get that. So that's the markets. That's what I'm seeing. I've put out so much analysis. I just gave even more analysis out now on the markets and everything. It's already a 28-minute video. I thought it was gonna be quick because it's a short week, but still giving you guys tons of good information and stuff. So once I get talking, I really start figuring more and more things to talk about out. So hopefully you like that. I mean, why wouldn't you? You wouldn't be following me if you didn't like listening to my videos and seeing how I think about things, and seeing my technical analysis and economic analysis and everything. So I appreciate all your guys' support. Can't say it enough. Appreciate all your guys' support. I love you guys. Happy holidays. You guys are the best. Um, I'm not going to go through all the high five trades. I've went through them countless times this week. I even charted some more of them again yesterday. They're all still good, or I wouldn't be in them. We did consolidate after getting out of some losing trades. Um, and like I said, if I think the market's going to bounce hard, and we're going to continue higher, and I think we're going to be at all-time highs before the end of January again. That's my prediction. Be back at all-time highs in the markets, QQQ SPY, IWM before the end of January. That's my prediction, not financial advice. It's just based on what I'm seeing on the charts and where I think we can go in that amount of time. Um, and with that, that means these trades that I'm in, the high five trades that are all still green, that are all still really well set up, they're going to fly high, and we're going to do really well in all of them. And then as I, collect some more capital, as I hit some profit targets and get out of these, then, maybe we could look at, adding some new positions here and there and everything. But I will say this past week has I'm always trying to learn. I'm never going to sit here and tell you all that, I'm perfect or, my ways are just perfect and, I'll never change something. That's just not how trading and investing in the stock market works. You always have to tweak and make things better, including yourself and what learning, um, and just being able to understand everything. You got to continuously grow if you want to be the best and you want to be profitable and you want to hit your goals, whether that be becoming profitable or whether it be, making $10,000 in side money, side hustle money in the stock market while you work the job you're passionate about. You know, it's you got to continue to learn and tweak. And like I said, I quickly realized last week, yeah, I was posting about all these different trades, which I love. And basically, a lot of them were really good setups. And I just kept entering them because I'm the type of person that if I post about a trade, even sometimes whenever it's somebody like I do charter day, like I did yesterday, um, even when I do those and I'm just like, yeah, give me a chart and I'll tell you what I think about it. I'll do my technical analysis on it. I'll run it through the high five strategy and the Williams consolidation box strategy, and I'll tell you what I think about it. Even when I do those, sometimes I see a good trade and I'm like, I'm gonna ride this, right? Or or sometimes I post setups or sometimes I post trades that I'm not in, just because I think it's a really good setup or trade, and I want people to know about it. But then I got into this thing, and I didn't realize until last week when I just had like 21 positions, and I was like, "What the heck?" Um, that I was basically posting a lot of these positions, and then I would get into them because I felt like I needed to be in them because I posted about them. And I did not want to do that. I did not want to be like that. It came out of nowhere and it kind of sideswiped me. And I didn't realize it till last week. And I quickly caught it. And I said, no, 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 no. My whole thing was less than 20 trades. And now I'm realizing 20 is just too many. So it's always about tweaking. Now I'm sitting here and I'm really going to be trying to be under 15 at all times. 15 of the best trades, the best high five setups. And if I need to trim a position because there's not much upside and it's just not really that great and I already made money on it and there's something else that's a lot better that's just breaking out or just taking off, I will do that trimming or exiting that position to get into the other position because it's this game's all about percentages. It's all about risk reward. It's all about capitalizing on the best opportunities. So, um, yeah, take it from me, learn from me. Always be looking for feedback. Always be journaling. Always be reviewing trades. Always be reviewing your strategies. Always be reviewing yourself, your mental state, your everything, everything. And don't be afraid to tweak things for the better. Always be looking to cut the fat and get down as lean as possible. And that's what I think cutting down, going from 20 to 50, no more than 15 trades, I feel that we're cutting that little bit of the fat off and getting down to a good position. I never want to be at only 5 trades because that's too risky. I want to be, I think, 10 to 15 at any given time is the bread and butter because it gives you that good risk to reward where with my strategy, and I don't want to sound cocky when I say this, with my strategy, I've been using it long enough. I've back tested it long enough. You guys have seen it. It's proven. Um, I'm going to win more than I lose with my strategies. And so 15 trades probably looks like minimal 10 and 5 minimum, but typically it's going to look more like 12, 13 and 2 or 3. 13 and 2, 13 wins, 2 losses, 12 wins, 3 losses. It's typically what it's going to look like. I don't want to be in 5 and it be, 3 and 2. You know what I mean? Because that can happen. So yeah, I think you need enough trades to spread out that risk to reward, but not too little of trades. So that was kind of my that thought process after I pondered on last week and what happened and how can we be better. And I also made a post about the QQQ and everything. And I sat here and I was like, man, when we get up here to the top of the Williams percentage range, when we get up here to the top of our barrier and our Williams consolidation box, we really need to not be adding positions unless they're just like the most perfect position, right? We really need to be sitting here and saying, okay, we're at the top here. We're probably going to get this pullback here soon. Like we saw this consolidation and pullback here, like we saw this pullback and consolidation, and now here where we saw this consolidation and pullback. When we get to these tops, we need to use all of our strategies to the best of our abilities, and we need to sit here and say, okay, we're up at this barrier on the QQQ. If we're in positions that are in the QQQ, or we see across the SPY and the QQQ and the IWM that we are running into this red barrier big time. Well, at that point, we really need to sit there and say, let's not be adding to positions. Let's be taking some profits. If we're close to our profit targets, let's just take the profits. Let's not be greedy, right? So what we saw with Shopify, look at this. Our profit target's 121. We never hit that dang thing. We were at 120.72, almost 119, and then 120, $120.10. We never hit our 121 profit target. But look, that was 2 December to present, right? Look, 2 December. Boom. That week, we're running into the barrier. Why not just say, okay, we're literally pennies off. And I actually did take profits at 120, between 120 and 120.72. I took profits because I always sat there and said, we're right there we're right there. Let's just take our profits, especially if we're seeing some things not looking so good on the overall markets, right? Let's just take our profits here, because look what happened. If we didn't take our profits here over literally pennies, we would be down here and we would have lost 10% of our gains. So that is another thing I was pondering and thinking about this past weekend. Yeah, or this weekend. So I'm gonna start using that in my strategy as well. Is just when we get up here, let's look through our high five trades. Let's take some gains that are close to their barriers, especially if we are running into the barrier on the markets here, and then also running into the barrier on the individual stock. Yeah, maybe even we just like figure out this strategy where we, if both of those things are happening, then maybe we take half our position off the table, right? I'm always up. I'm always up for more strategies within trading, right? The high five strategy and the Williams consolidation box strategy, those are built, and those are going to stay the same with minor tweaks. I've actually started to use the I've always used the channel, the bullish and bearish channels. I've always used them, but after this week, I really am like, you know what? Maybe I should integrate this with the high five strategy and the Williams consolidation box, because what we see is Nope, not with that. Um, let's see. Actually, I think MBLY is a perfect example. Look at this one. And this is more an investment, and I'm not really looking to get in and out of this thing. But like MBLY and HIMS, like if you were just like getting in and out of this thing, if you use my strategy, look how predictable this is. We're running into the barrier. At the same time, I'm pretty sure we were running into the barrier on the SPY or Q. That was October. Yep. So we're running into the barrier on the SPY, QQQ, and MBLY. We're at the top of the channel on MBLY, and what happened? We came down to make our support. Look at this. We didn't go higher. We had a 9% down week. And then we came back up and we had a 20% up week. And look at that. Came back to here. And this was 18 November. 18 November. Nope, we were not at the top of that. So we wouldn't have probably exited. But we were at the top here. And what happened? We came and pulled back down. So we're getting to the tops of these channels and then coming down, getting to the tops of these channels and then coming down. So I think I'm going to start incorporating this as well into the overall strategy, because you see it makes a lot of sense. But for these are investments, majority investments, and then some shares to trade. But we see what happens on HIMS too. Like we come up and hit this barrier and then just spike down. Hit this barrier and then just spike down, right? So if it wasn't MBLY or HIMS, I would definitely use this strategy of the channel and the high five and the Williams consolidation box to try to time these better and in or in out in out and just collect that money along the way if they're not investments, right? So yeah, guys. Okay, that was a long video. I think this is actually my longest video, and I said it was gonna be the shortest, but who cares, right? You don't have to watch all the way to the end. If you did, awesome. I hope I taught you something. I hope you learned something new. I hope I gave you some different ways to view the market. I hope X, Y, or Z, guys. Nobody has to watch these. Nobody's forced to look at my content. None of that. Um, so if you did make it to the end, I appreciate you. If you didn't, I also appreciate you. Um, be prepared for a weird week. Hopefully, the Bulls take over this week and we continue higher. But if not, and we just have an inside week, which is we're just consolidating sideways or just back and forth, whatever, right? It's not that big a deal. I think over the next weeks and months, we will continue higher in this bull rally. And if you're a buyer of this dip, I think you're going to be very rewarded. And if you were, I'm proud of you. Congratulations. It's what you're supposed to do. If your favorite store had 50% off the entire store, you'd be in there like a crazy person, just plowing people over to get what you want, right? Like on Black Friday. You should be doing the same thing in the stock market. So I appreciate you all. I love you all. Thank you for your support. Thank you for everything. And go have a amazing holiday week. Go have whatever you celebrate. Everybody's different, obviously. Whatever you celebrate, I hope you and your family come together. I hope you can put the devices away and put everything away and just have a amazing, amazing, amazing holidays. And just really enjoy it. So love you all. Happy holidays. And I'll see you in the next one.